Can you see me?
No, I can't actually, but if you're here, there we go. I was
I
sitting here thinking I can hear some.
was like, I don't think you can see me.
No, that's very weird. I was sitting here thinking I can hear her, but I can't see her. So anyway,
I am a
uh,
ghost. Like I look forward to that the next chapter in my existence someday because I am going to be the best ghost ever. You know.
that threw me literally. I was about to WhatsApp you and go, I think I can hear you, but I can't see you. But anyway, everyone else, welcome to the Grain Market Blast. It is, what day is it? Tuesday, the 4th of November. As a reminder, as you can probably tell, these aren't edited. These all go out as we record them. You know, the good, the bad, the ugly, it's all here. There may be the occasional expletive, but as usual, the goddess of grain, Angie herself, will be giving us a rundown on the latest pricing flows and market moving news in agricultural markets. But before she does, I'll get the boring legals out the way. Nothing discussed on this podcast is trading or investment advice. Nothing is an endorsement of a product. If it was, we would be very, very clear about it. Yeah, and that's it. Over to you, my ghostly friend.
Right? Ooh, it's
Ooh.
a week too late for that. Yeah, I would totally do that too. I'd just do all the classic ghost things and like chains and everything would be awesome. But anyway, happy Tuesday. It feels like a Wednesday. I don't know if it does that to you.
Yeah, very much so.
Yeah, does it? Okay, cool. Because
Yeah.
I could not be alone. But market wise, here as we start the morning, we are under pressure. You know, a little Freddie Mercury and all that.
Under pressure.
Yeah, that's what I've got in my head now too. But we are trying to see, kind of if the low established prior to the bagel break is the low we want to trade for most of the day, similar to kind of what we saw yesterday. We came in, we had some overnight strength. We came in and they just kept trying to push the thing down and it really didn't want to go down. Like
We've got to say as well that it's not just agricultural markets that are under pressure. It's definitely it's a risk-off tone across all assets. Although
yeah.
stocks are bouncing at the moment, so this be fair to the ags. It's not just a lack of love for them; it's a lack of love for any risky assets.
Well, I think
at the moment.
And I think that's the story. That's the main focus at this point, right? Like, what are we going to do with money flow and how does what all takes place? Because you've got some underlying things that have my attention now that aren't necessarily grain centric, but they matter because they are hinged or they're connected to buying power and lending power and credit and some of these other things. Like repo, like the with the government closed, like we're seeing on the lending side, like we're seeing banks need access to more capital. We're seeing more in the way of concerning data regarding, loan deficiencies on cars and some of these other things that we have. And like, obviously the longer the government shutdown wears on and some of these other things, which I think today being, there aren't a ton of elections, but I think today, and I'd read an article, this isn't just my own opinion. Like I did read something this morning that kind of said the same, like we've got some elections taking place today and that could send some messages and some other things like that. And so I feel like we're in a bit of an impasse monetarily from a money flow is really what I'm looking at from a money flow standpoint. Like there are some people right now, they're really looking at grains, as a potential buy, like if China comes in, if things are as tight as what they look like, and some of these other things, like obviously grains have kind of sat flat while everything else has taken off or had its day and maybe it's cyclical because grains, really were the first thing not grains, lumber was technically like when we saw the market take off.
Oh yes. Yeah.
Come into play, and lumber's not doing anything right now, so that I know of. But like I'm saying, like basically grains are the cheap thing. Like, have we seen everything run where grains were first cheap? They got too expensive. They got sold off. Everything else has been bought for the last few years. Well, grains have gotten exceptionally cheap again, and did we get too cheap and they end up getting bought again? And a lot of that obviously is going to hinge on China demand and some of these other things going forward. And so first things first, money flow. What do we need to do in order to really kind of build confidence for the investors to come in and take this thing another leg higher if they in fact want to? Because soybeans right now are a dollar. They're down 15 cents this morning, but the November contract is still $1 higher than where it traded for its lows. It's October low. You know what I mean? So we've seen this market recover. We've seen basis get strong. Flat prices offered opportunity. So now the next step is, do we take another leg from here or what do we have happen? So, that's one of the bigger things that we're watching today. Obviously, we have, conversation about China. Will they, won't they? What are they doing? And a lot of focus on basis and Brazil basis. And so I think the market, or I think the narrative, I should say, the analysis is missing a very important thing that took place here a couple 2-3 weeks ago. And I think we're putting maybe a little too much credit, giving a little too much credit to China and the China trade deal and some of these other things for the soybean meal and soybean strength that we have seen. And so there's kind of another factor at play. Like, obviously, we're waiting to see if China comes in and what they end up doing. But there's been so much focus on basis. One of my, things where I've been like, wow, look at the processor basis. Look at how much that is firm. That is a sign, obviously of reduced supply versus demand. And now I'm kind of getting the inkling that potentially it is because it's more heavily demand maybe than supply, though we have to figure it out. But so many people missed the EUDR determination on October 21st, myself included. Like, this just hit me like a pile of bricks last week, or yesterday, excuse me. On October 21st, the EU Commission determined that the European Union was going to go forward with their deforestation regulations at the end of the year. Going into that decision, so many people, a lot of folks had thought they were going to kick the can down the road again. I was under that impression that we were going to at least be 6 months delayed, if not a full year. And the EU Commission came out and said, nope, the micro and the small producers will be able to get this exemption. If you're a large, if you're a medium to large size user of soybean meal, soybeans in general, cocoa, lumber, all of these things, whatever, like, you are going to have to follow through with the EUDR regulations. And if I remember correctly, and don't quote me on this, you can correct me though if I'm wrong, and I'll do my research and be able to come back tomorrow and be like, I was right. But if I remember correctly, I think part of the EU trade deal did give the US preferential agriculture, like preferential purchasing power for what, like, they're supposed to look to the US first and foremost.
Right, yes, yeah, yeah, yeah. It was meant to be, yeah. US first
But
look, and it's like for like, they should always be leaning towards US purchases. There was
US
something
purchase
around that. Yeah.
for one. And then for two, the EUDR, like, they did loosen up some of the regulatory burdens or hurdles, and it benefits the US producer. And
Yeah.
so I think that there's been a double whammy. I think that's been part of why you've seen weakness in Brazil basis. Obviously, the farmer has been selling more because the futures price has been rallying, so there has been some more weakness in Brazil basis. The US basis is firmed because the processor is getting more froggy. The farmer is less likely to sell directly after harvest. And so you're just seeing some really messy things happen in cash that are, confusing. So to see us backtrack a bit today is not surprising, especially too, we are hearing that China is going to auction off soybeans again. We've heard this rumor. This is the third time now this year that China was going to auction off 3.5 million metric ton of their government reserves. And so we'll be watching to see if that's the case or not. It doesn't make sense that they would. The only reason they really would at this point, in my opinion, would be to make room for intended purchases into government reserves of new beans.
Right.
Right. So they might flip the supply or whatever, but we'll be watching. I mean, that's really right now, like, a lot of folks are, I think a lot of folks don't realize that, or may have forgotten that, cash grain doesn't move. It oozes first and foremost.
Yeah.
So, like, you're never going to have, like, we wake up one day and all of a sudden the clarity is present in what is all happening, but overall at this point, we're just waiting to see if you get a continuation of China coming in to buy. But right now, I would say confusion kind of drives
Yeah,
the story.
confusion reigns, absolutely.
Yeah, how fun is that? Thanks for your in-depth analysis here. Everything is confusing and we don't know what's happening. But that's basically where we're at this point. One thing I will add, there is talk that China has bought sorghum. I've heard a couple different folks say that. I don't think I've seen anything in basis, but I'll be completely honest. I don't track sorghum basis like I do corn and soybeans. So if anyone's listening and wants to chime in, please do on that. We did see China auction reserve corn out of they auction off, around 100,000 metric ton today. They had a clearance rate of 82%. So that's a pretty solid bounce. We had been seeing
Yeah.
clearance rates of less than 30, less than 20. They kind of stopped offering the corn. So to see them come in and clear 82% of what is offered, basically as harvest is progressing and cash corn has been under pressure, to me sends potentially some signals about, what the quality of the corn is in the pipeline, but at the same time, this is like 2020 2021 corn. So I wouldn't get too excited about it being supreme quality either on that side. But, for the most part, we're hearing some additional interest in China coming in and buying some soft white wheat and a few other things like that. We did get Stonex released a new yield update last night. That's been part of what's been putting this market under pressure as well. I'd be remiss not to mention it. I used remiss. I don't even know if I did it properly, but I don't care. It sounded but I would be, it would be, I have to mention it. Basically, they bumped up corn yield and I think kept soybean yield in line with last month or bumped it up again. And I honestly, okay. I think it's important to kind of remember that the Stonex data, the survey is compiled or is, based on elevator merchandisers and things like that. And so I think if you were to ask the merchandiser right now, they would probably still be steadfast in their yield estimates. It's just the farmer has kept it to home or whatever. Like
Right.
that's basically the mindset. And so it doesn't surprise me to see Stone stay that way. I think they also tend to gravitate towards what the USDA says. So like if the USDA come out in October and went from 186 to 182, I'd almost bet you dollars to donuts Stone would have been 182.5 yesterday or something like that. You know what I mean? So the lack of the
Yeah.
October number, and I'm not trying to be critical. I'm just saying like I feel like the industry we're lemmings to a certain extent. we can't we can't break it. We're just like, oh, okay. And so that's where we're at. But they did come out and say that if that is the case, obviously we have a ton of room, we should be okay. But cash market strength and some of these other things don't necessarily show that. You'll obviously have to see if we get a flat price corn rally, if we get movement or whatever. But for now, here we are. We'll just see export inspections were good yesterday too, by the way. But yeah, I think I'm done. I think that's
Wonderful. Well, we've also seen some whilst you've been talking, I think the longer you talk, the higher the S&P goes, so potentially risk on,
I
whilst
like
you've been
it.
talking. So hopefully that feeds through into the crop markets. But yes,
Love to
Angie,
see that.
have we seen a bid since we've been talking? I've not, you're the one in front of it.
No, just beans are down 14 currently.
Oh,
Corn's not. Everything's kind of trying to come off its low except for wheat. I don't know if anyone told wheat it's open at 9:30. It's just kind of there like the blobfish that it is.
got you. As usual. Um, Angie, thank you so much for today. As always, really appreciate your insights and analysis. Listeners, thank you so much for tuning in. I'm not sure why I still can't see Angie on my podcast player, but there we go. She's definitely here. Whatever you're doing, stay safe, keep it tight, and we'll see you all tomorrow. Much love.
Have a good one, guys.